Hey everyone, it's Daniel here from Infovest. I just want to do a quick video talking about the US dollar, right? We've heard about the euro reaching to parity mark against the US dollar. It's 1-to-1 now. If you look at the dollar index, the Dixie, we're seeing the dollar index reach to levels back in 2002. And the dollar just continues to move up on higher interest rates that is coming out from the Federal Reserve. Now, we did get out inflation numbers in the US, and the numbers for the core and the headline number came in higher than expected. Definitely, you're going to see in the news reports, you'll have a lot of the news agencies come out and talk about inflation at 9.1%, and inflation continues to move up, which basically has this again, self-fulfilling prophecy that as consumers start to see higher inflation and talk about inflation, and especially see reports that inflation is now at 1.1%, it's gonna do some effects on the psychology of a consumer, right? They're gonna see, okay, prices are moving up, businesses are seeing, and already are seeing it within their cost, that prices are quite elevated, and it is gonna continue to affect a lot of these businesses and consumers. Now, how do you combat that, right? You know, the only way the central bank can do so is by raising rates, since they can't control the supply side. Remember, a lot of people do say that, you know, the printing of the central bank created inflation, you know, because the central bank printed so much money, that's why we see higher inflation. Yes, that's true, but partly because what really drove the inflation and the prices was mostly the supply side, right? The central bank has been printing and tapering for a very long time, and inflation has been around 2%, or hovering around that level or even below. And over the time, you know, the central bank has been having issues with fighting inflation and seeing that, okay, inflation is becoming a little challenging to bring up. And all of a sudden you have this COVID pandemic, all of a sudden that you see that, okay, this COVID pandemic is created a supply chain issue, and all of a sudden you see, okay, a breakdown in the supply, which is affecting, you know, the efficiency of supply, which caused prices and commodities and prices to move up, right? Now we're seeing a lot of the commodity prices, especially oil, sell off quite a bit. And the report that we got today talks about June's inflation numbers, right? Not this month's, but June's inflation number. Now, this month, July, if you could see, you know, the supply chain get better and the commodity prices get better, then sure, definitely, you know, you might see, and especially you see oil sell off, you might see a lower inflation report in the next CPI report. That's possible, especially in the headline, right? Headline number, which is driven by energy cost. Now, let's go back to the dollar. I sidetracked a little bit there. So let's go back to the dollar. The dollar the dollar index has reached to a level that we haven't seen back in 2002. And this is a problem, right? With higher inflation, higher cost, it does affect consumers, it does affect businesses, but also affects countries globally, right? Now, you could argue that with a higher US dollar, right, with oil prices coming down and with possibly things getting better, maybe, you know, I put an asterisk on there because still it hasn't. You do hear reports that certain cities in China again are locking down, right? And if that escalates again, it's going to cause more problems, right? It's going to continue to keep inflation elevated, and then you know, you just question from there is how much longer can the central bank bear with higher inflation and keep raising rates? Now, with the expectation that the market is expecting that, okay, you know, the Fed is expecting that this month, July, we're going to see a 75 basis point rate hike with a 40% probability of a 100 basis point rate hike this month, right? A 40% probability of that happening. And that continues to push the dollar higher. And you may think that, oh, okay, as an American, higher dollar is great. I could go to Europe. I could buy goods for 1-to-1. I can have a cheaper vacation, etc., etc. But this does come back to bite the U.S. Down in the future as dollar continues to rise. And why is that, right? With a higher U.S. dollar, it basically creates problems globally, which is going to end up affecting the US anyways. So how it affects globally is that a lot of emerging markets, a lot of countries out there that depend on US, buying goods from US, right? The US is a big producer and a big exporter of food. So food is very important for our livelihood. We need food. We need to eat to survive. If we don't have food, we're going to kill and attack and do whatever it takes to get food, right? Just look at Sri Lanka, right? They have huge issues with food inflation, with prices moving up, with getting fertilizer into the country, with the country going default, the president, fleeing the country. People are just rioting over there and breaking into the president's house and swimming in his swimming pool, right? So, it's going to cause an effect where a lot of these emerging markets, and Sri Lanka being one of them, right? A lot of these markets out there, you're going to see a lot of them get squeezed, right? A lot of them get squeezed to a point that, the US dollar is too expensive because it continues to move up. They need goods from the US economy, and it's going to affect them, which means they're going to be buying less, which means that the US economy is going to be selling less, which is going to affect the growth, which is going to affect the businesses within the US, which you might argue a higher US dollar and less buying of goods in the US might cause inflation to come down. It's another pro for inflation to come off from its highs, right? That could be one aspect of it. That's how you could look at a higher US dollar. But in turn, if that happens, with a recession looming and with also supply constraints that still does keep inflation elevated, right? That does affect a lot of businesses, and a lot of businesses may start to see that, okay, they're getting less foreign buyers, they're seeing cost is going up, they need to lay off workers, and even though as the US dollar moves up and a lot of countries around the world need food, need fertilizer, need those goods from the US, guess what? It's also going to be, and especially if you have this food shortage and food issue, not only countries around the world are going to feel the pain because of the higher US dollar, but within the country as well, within the US, they're also going to feel the same pain, because if they're exporting food at higher prices, higher valuation, higher numbers, then yes, you can expect within the economy as well, when it comes to food prices, to remain elevated, and a lot of consumers to feel the pain as well. Because remember, the corporations are going to be affected by less demand, less foreigners coming in and purchasing goods from the US. So if they got less sales from foreign countries, they got less sales from within their own country, and they've got higher costs, and they're laying off workers, or there's a shortage of workers. You're going to see a lot of companies may go bankrupt, and especially these zombie corporations who have so much debt in them and have borrowed so much. And I've been talking to I just talked to someone recently who talked about he was talking to a business owner who borrowed the stimulus money and use that money to basically buy more goods, and people are not spending and not buying those goods, and from all the purchases that they've done. And on top of that, some people even took stimulus money to invest in the stock market, at the highs of November, December of last year, and are seeing basically their portfolio drop about 60% because they bought really risky assets or crypto or etc. Right? So this is all going to have an effect. Right? The US dollar moving up is going to have an effect on foreigners. They're going to buy less. It's going to affect the US economy, and it's going to make the recession a little bit more worse off. Right? How bad can it get? That's a question that we're all trying to figure out. But definitely it's not looking good. Just don't think that, sure, you higher US dollar and a recession could bring down inflation, but the story doesn't end there. Right? The story doesn't end there. We do see that can have major implications within the country, especially foreign countries that will spend less and cause the growth to even decline, as the U.S. Has a tough time trying to sell these goods and see higher growth. Right? So definitely that will have an effect on the economy and the markets. Now, in addition to that, a higher U.S. dollar for countries and foreign countries who have invested in the U.S. Treasury market, the bond market, that also has another implication. You're hearing already liquidity issues in the bond market, right? If you have a high U.S. dollar, you need to buy goods, food matters to you, essentials matter to you, and you're invested in the U.S. bond market, guess what? There's going to be less bidders, less buyers from foreign countries to buy U.S. Treasury, U.S. bonds, and actually you might have sales of U.S. bonds to bring back those dollars and bring back that money into the country so they can go and import goods and services, so they can go and import essential items that they need, because they're going to suffer. So that's also another implication where you could see that higher U.S. dollar is not going to be good for in terms of the liquidity in the bond market, which could again cause a lot of problems within the debt markets and could trickle into a bond sell-off, which would push yields higher again, which would affect the zombie corporations that got a lot of debt and are seeing their yields and rates move up. Right? So definitely, again, another negative implication of a higher U.S. dollar that could really affect the U.S. economy and U.S. markets. So let me know what you guys think. Leave a comment below. Give a like to this video. Subscribe. If you want to hear more about this situation, just comment different topics that you like, and I'll see you guys in the next video. Later. Goodbye.